afternoon, good evening. Welcome to the inaugural ITFA Insights podcast. This is a start of a series which we encourage you to get involved with if you are interested, but also to learn from the experts that we are lucky enough to spend a bit of time with. Today, I want to welcome you to Alisa Rusanoff, who, if you don't know her, then you should. And you're going to learn a lot about her over the next 20-25 minutes. And we're going to be talking about a rather ambitious topic, which we've decided to call the technological innovations and changes in trade finance, which I think is as topical as you're going to get, leaving politics to one side. So without further ado, maybe, Alisa, if you could introduce yourself, your background, and your company, please.
Sure. Thank you so much, Brendan. Glad to be here. So I'm Alisa Rusanoff. I've been in trade finance for the past 8 years. Started my career in investment banking over a decade ago in New York. Been in New York since then and love it, even in COVID times. And I'm part of a company called Crescendo, the trade finance department, alternative capital investments. And we provide different types of solutions to SMBs, small to mid-sized businesses, including supply chain finance, factoring, asset-based lending. I work with embedded finance companies, fintech companies, anything that has some receivable side, happy to look at that, whether it's in the US or abroad.
Perfect. Thank you. Now, for those that, again, don't yet know you, you wear many hats and you've authored many articles. And I'm going to just quote one from an article you recently wrote, an excellent article in the Trade Finance Global Journal, where you outlined, and quote, several factors driving the increasing efficiency that will eventually lead to full commoditization of the trade finance and SME lending strategy. There's a lot there. Can you sort of elaborate and unpack it for us?
Sure. I was actually inspired by a great book, The World for Sale, by excellent Bloomberg journalists. And the book is really about the trade finance space of this 20th century. And the way, the margins used to be, tremendous. It was a very kind of private industry with little or no transparency at all. And at the moment, one of the companies that became public published their financials. It was pretty interesting how that was a point and the start of a change. And I feel like right now we're going through the same or similar transformation in terms of understanding the markets, and the markets going from not efficient or semi-efficient to full efficiency. And that is certainly caused by quite a few factors. And one of them is obviously technology, with OpenAI, ChatGPT, and other types of tools that came to the market and kind of made it available to the public. And I'm talking quite a lot of fintech companies, tech companies, or even finance companies that are trying to embrace the change. There is really good statistics in terms of how that would impact the job market and the efficiencies operationally in any type of finance institution, whether it's a bank or a non-bank lender. And, Gen AI and other types of technology would certainly be able to help that and accelerate the speed of the change. Among the tech innovations that I'm kind of watching and, have been implemented in the past are open banking. That's the space that has been quite rapidly developing in the United States, but also abroad, as we're looking at it fund a lot of cross-border transactions and deals. It's certainly a very interesting development in Latin America, in Europe, in South Asia, and other parts of and regions of the world. Another one is various types of integrations with ERP systems, integrations with other types of, whether it's accounting systems or CRM or other types of softwares. That's a very interesting way to automate the data, and that helps you mitigate fraud, that helps you create embedded solutions, including finance solutions for your customers or for your funders. So it has a lot of different angles that are quite interesting for the industry and industry development. And obviously there is ZLT and Internet of Things. So there are quite a few technology tools that would be accelerating the trend. But also there is, I guess, region like Latin America and Europe ahead of the game in electronic invoicing. That's also a very interesting development. It's kind of a hybrid between technology per se and regulatory environment. So that is certainly driving some appetite and some investor interest because it makes the transaction, let's say, SAT or SAT in Mexico, a little bit more secure in terms of underwriting processes. So that's an interesting development as well. And probably one of the most interesting things that would be triggering changes in the trade finance industry are payment related. As we know, VCs have been heavily funding the payment industry for the past decade or so. And it seems like with Gen AI, it's certainly moving much faster. And especially anything related to cross-border payments is a super interesting idea and industry right now. There's a lot of regulatory initiatives in terms of payments. There's a lot of tech initiatives. There's a lot of companies that are trying to come up with payment reconciliation and verification and KYC, KYB types of solutions driven by LLM models, right? So all of these factors combined, I think will certainly help the industry, will certainly accelerate the speed of change, and the change needs to come, right? It's a very outdated industry with a lot of paperwork, with a lot of players that are not necessarily tech driven or tech enabled. And I think in the next couple of years, we'll certainly see a lot of that change pretty rapidly.
Wow, that's an awful lot to process. Thank you for that. And I think you covered about 20 different topics there, which was impressive. The simple one that caught my eye was open banking. Now, what is that? In sort of layman's terms, if you will.
Sure. So open banking, you can look at it as consumer oriented or business oriented, right? B2B or B2C. So the greatest example, if you have some brokerage account as an individual and you just trade in some stocks, on a weekend, probably your brokerage account or some companies like Robinhood and others, they would allow and they would ask for a consent to basically be linked into your bank account live or directly, right? You don't have to send a wire every single time to your Robinhood account or any other account, right? So that's open banking. So they have access to your banking information live. It doesn't mean that they can do anything. It's really you and access, but they can basically get the information they need and you allow them to have access to live from your account. So it's an efficient matter in terms of operational transparency and efficiency, but it's also protecting different types of fraudulent activities, and it also helps you with your fees. They don't charge you a wire fee or any kind of transaction fee every time they draw the money from your account. So open banking on the B2B side certainly allows, in my world, for example, and there are different types of, implementations and applications here. But in my world, it certainly helps understand the client better, right? You have access to their bank account as opposed to getting bank statements from the client in PDF version. That's certainly super exposed to fraud. And, both of us coming from the industry have certainly heard of, if not seen, heard of a lot of cases with fraudulent activity on the borrower side. So that protects you from fraudulent activity, right? It protects you from anything that's related to KYC or KYB risks. It helps you assessing credit risks better. It helps you understand the cash flow of the company. It helps you understand the data, and verification of the data is also an important mechanism of that. So open banking is coming to certain regions. So it's very fragmented, and regulatory wise, it's also very fragmented in terms of what's allowed, what's not allowed. Like, for example, in the Latin American region, it's pretty advanced on the consumer side, but it's not as advanced yet on the business side, on B2B side. So you just have to be watching carefully in terms of regulatory environment, in terms of tech enablement, and the players that are trying to build something to really be able to understand your customer's customer, and your customer's suppliers, right? To have a complex understanding of the credit, fraud, and other types of risks.
Excellent. Well, fascinating. Actually, you again touched upon some very key things. That bad actors are everywhere, and obviously technology is here to try and shield us, the good actors, or the well-intentioned, to be dealing with clients who are also similarly minded. Now, fraud, however, continues to crop up, or a legal case or a discovery continues to. And now, do you think that AI has the ability to eliminate that entirely, or just maybe to the 99th%?
It's a good question. Ideally, yes, but technology is only as good as the human user it is. Meaning, if the bad actor is a human being that's trying to defraud you, he or she or they are going to be using just the same tools, right? So, we've probably heard of deepfakes and other types of automated technology solutions. Well, not solution, but threats rather, in this particular case. So what my concern is in this regard is that companies and a lot of banks and non-bank lenders who are not necessarily tech-enabled, or they don't have, significant budget to really build their tech stack, they would be more exposed to those types of risks.
Mm-hmm.
So the fraudsters that are trying to use AI, Gen AI, and deepfakes and other types of tools that are, pretty 2024, they would be, as a human being, it would be really hard to understand that it's a fraudulent account, or it's fraud, or the person does not exist because it's a virtual meeting and things like that. So I don't think it would be able to eliminate 99%. I think it's probably going to stay the same in terms of percentage-wise and, fraud-wise. It's just the competition in terms of whose technology is better, right? And what risk we're trying to mitigate. It's always a little bit proactive, but a little bit reactive as well, right? Fraudsters are very creative, and we know that. They can come up with different types of, angles and, gaps in the fund request or on the operational side of the business. They'll learn what the lender's looking for, what they're building. So it's always going to be a long path as opposed to, hey, this is a solution that solves all the problems at the same time.
That's interesting. Thank you. That's what takes me on to your observation across the small, medium-sized enterprises, as well as the sort of other mid-sized investors. Technologies can be expensive, can be a multi-million, multi-year commitment. Do you sense that there is a resistance or reluctance to undertake those sort of costs if you don't have to, and try to make do with the current methodology? It's listening to you. You said the competition who has the best technology is likely to prevail. Is a challenging remark, but it's something that makes me think, what's holding people back from following your advice?
Yeah, that is an interesting question, because I think the future is whose technology is best. I think pretty well said. Meanwhile, I do believe that lenders that are not trying to enable some technologies and build some basic tech stack in their operations would not be able to compete marginally, because cost of capital would be going down for the borrowers because the efficiency in the market is already going up, which means the more there is a downward pressure in terms of margins in the market. And we're certainly seeing that at this point in time. We know that there is a lot of money and funds and capital that's coming into the private credit space, trade finance, asset-based lending being part of it. And we're seeing very, very low margins on, first positions on larger types of companies. In terms of implementation, actually Gen AI and ChatGPT being a public, or not necessarily all of it, but certainly some of it is available publicly. It certainly helps a lot of SMBs to be able to build some technology with much less labor and tech budget. So that's a very good side of it. Probably a bad side of it, you have to be competing for labor, for talent, for really good talent that is, those people that are able to not even necessarily code or, be like great engineers, but those who would be able to thoroughly communicate the message and what they're trying to build, right? Again, I'm talking to a lot of people in the fintech world, and, I'm coming myself from fintech. Right now, even versus 2-3 years ago, you would need much less efforts or talent on the engineering side to build a product, because Gen AI is so massive and so powerful, and it's getting better and better and better. There's an interesting, law, if you call it Moore's law, which basically means that technology and the speed of advancing is accelerating all the time. So it doesn't go, 2x, 4x, 8x. It's actually accelerating the speed of innovations and advancements. What I did see, what's interesting is that SMBs in the US and abroad, they're usually the most resilient, and they actually want to include technology into their stack, into their efficiencies. And they're trying to learn, they're trying to build something, they're trying to automate. I've met so many companies, you would call them SMBs, and they are SMBs, whether it's US or abroad, and they just have to compete, and they're the most progressive, they're the most creative. They're trying to find the best solutions. Maybe they can't hire a full-time engineer, but they can get a dev shop somewhere in Latin America or Eastern Europe or South Asia that can build some, products for them. And it's been pretty fascinating. I think more like mid-cap lenders are probably not as technology advanced because they believe that they have enough volume and enough reputation and enough labor force and talent on the sales side to be able to compete. But I don't think that's a great long-term strategy, to be completely honest. And we can look at a few banks, and there are quite a few banks, maybe top three that I can name, but I wouldn't. But I can name that understand how important that is. They are invested in R&D. They're invested in venture capital sleeves that are trying to acquire the best tech solutions that are strategic acquisitions for those banks. So I think the best leaders, whether it's an SMB world or a large institution in the US and abroad, I think they understand the necessity to be competitive in the industry and to be able to address the risks that are brought by new technology, as we just discussed.
Which are constantly accelerating. Interesting. Well, in between the borrowers and the lenders are normally a whole host of service providers, admin, custodians, intermediaries of one, and I assume that they need to be at the cutting edge, the leading edge with any and all technological advances. And so you can't take that middle ground of a mid-market company to sort of rely on your reputation on the brand. You do need to be showing your value to both borrowing client and your funding investor, right?
Yeah, absolutely. I mean, all the players would need to be tech-enabled or tech-advanced, whatever you want to call it. So it depends on your operation, and it depends whether a fund needs you. The fund needs a fund admin or a custodian. It's a regulatory environment. There's certainly competition between those types of service providers, and I would imagine the majority of those, they would probably be mid-cap. I mean, obviously there's fund admins like JP Morgan and others. So we're probably not talking about that group. It's a little bit an outlier. They have their own budget. They invest a lot in, in Gen AI and in building, very robust and complex models on running all types of operations. But we're talking about the mid-cap types of fund admins and service providers. I think the best strategy for them, and I've seen it in the past as well, is to acquire smaller types of tech companies that are trying to build something that would be customized already internally. So that would probably be companies that have raised maybe seed round, maybe Series A round, because as we go to Series B, C, and above, the valuation is, very, very significant for a lot of these mid-cap service providers to be able to afford that. But I would really focus a lot on, acquiring smaller types of technology solutions as opposed to building them in-house, because usually entrepreneurs are a little bit more creative outside of the box. And then just buy them, early stage, customize them, bring the team or part of the team on, and have that path of really accelerating and bringing more customers because you're efficient. Customers like your UI and your efficiency. I guess that would be my answer on this.
Thank you. Fascinating as always. Now, you mentioned earlier distributed ledger technology, or DLT, the Internet of Things, other mediums through which counterparties, be they bank, insurer, whoever they might be, funder, that they're actually transacting. Now, those platforms or mediums, are there more of them than ever? Or we know if you want to buy equities, you buy from the trusted stock exchange. But equally, should you buy through a blockchain-based exchange for your financing of wheat from Australia or Canada? Are you seeing a bit more increasing growth in these electronic forums for transacting trade finance deals?
That is a good question. There's certainly a lot of marketplaces where you can buy receivables, as a participant. So it's not necessarily a deal that's structured for you specifically. I don't see a lot of investor appetite for those, to be specific. And I'm certainly not someone that has done a lot of it just because I don't necessarily like the structure, because there's less control, there's less understanding, less transparency on the deal side, right? And I want to be in first position on my borrowers, or at least on the first position on the lateral that I'm advancing against. So there's less appetite for marketplaces. But in terms of blockchain, this is a topic that we talked about a few years ago. Now it's totally forgotten. There's Gen AI, there's a new buzzword. Meanwhile, DLTs, I think, are pretty interesting from a credit perspective. I've met a few companies, I'm talking to a few companies that are still trying to build it. Maybe it does take time because theoretically, I do see a lot of opportunities and advancements and benefit of the process, especially for lenders. And it helps you with the legal, structural paperwork, with understanding the credit risks, the first lien position risks, and other types of risks. So theoretically, I think it's interesting. I think people a little bit forgot about it because we just got Gen AI, but I would believe it would come back at some point. But I think other, like you mentioned, Internet of Things, there are different applications to these tools, right? So I think Internet of Things would be more heavily involved in operational side of the business, right? We would probably look into inventory count, functionality, into warehouse management. So anything that's related more on the operational side of the business, which is as important if I'm, as a lender, trying to understand the risks involved. I mean, operational risks and fraud risks are certainly on top of my list. So I think there would be different types of applications to different tools or types of tools. And then every single lender would be able to come up with their tech stack, really understanding, which service provider is the best for this, and this type of risk.
Thank you. The presenting your debt claim, whether it's in the form of a promissory note or a draft or a batch of invoices, clearly technology should allow you to do that electronically in seconds. And clearly, by extension, the UK's Electronic Trade Documents Act passed about a year ago, which is a landmark, and I think has been followed by other parliaments, which is great. But in practice, still people tend to have copies of promissory notes or bills of exchange or drafts or actual invoices, right? Why aren't more and more practitioners transacting using electronic documentation yet, do you think?
I think there's not a lot of motivation, right? If I take my time, train my talent, my employees to do that, like, how does it really help me? So that's, I think, a very selfish question. And I think that's what's driving lack of engagement in the industry. I think the word and the power should be coming, and politics certainly does, from the capital providers, from the incentives on the tax side. At the end of the day, if you're using digital trade, it helps developing economies, it helps SMBs, small businesses tremendously. I think there could be some regulatory initiative that if you work with X amount of SMBs and you introduce digital trade and it's a goal of your business, I think there could be some tax incentives. And then when it really talks money, the process, meaning, I think there would be a lot more motivation. If banks would come in and say, okay, I'm going to give you capital at X over SOFR, but I'm going to give you a capital of X minus 25 bits over SOFR if you're using digital trade because it helps ABC UN goal, then I think there would be a lot more motivation. When it's voluntary like that, it takes a lot of time to educate people. But I think if they're really understanding the money aspect of it and there's actual capital and margin motivation, I think it helps much more. When humans as a species, right? If they need to get something done, we've seen it up to, World War II with the Geneva Conventions, with some UN accords and other types of agreements. they can get to a solution and to specific agreements because they're motivated for whatever reasons. But if there's no present incident, then there's lack of motivation. I guess this is how I look at it a little bit from a psychological standpoint.
Well, it's a fair statement. I think there was an accord recently signed by 90 something, approximately 90 countries for digital documentation, and whether or not that'll come into effect and become widely circulated. I don't know.
And it took, I believe, 5 years.
Yes, so there's a lot being. Well, a lot has happened in the last 5 years in terms of the methodology and the applications and the tools, as you say, and certainly, what I think some of the older folk, myself included, were still look at why do I need to transact electronically or through a medium which is faceless when I really only want to trust certain people. Maybe that's just an older mentality. Whereas if you can do things cheaper, quicker, faster electronically, why don't you? But I think the trade finance being tagged with a human or a relationship-based business, it will always be there, surely, won't it?
It will. But at the end of the day, if you look at all the historical industries that used to create jobs, used to create whole industries, they aren't going away with technology coming in, right? We've had multiple industrial revolutions, tech revolutions, and other types of human development and innovation revolutions. So it takes time, it takes education, it takes the will of certain leaders to change the things. But if you understand the long-term goal, why you're doing that, and how it actually helps the small businesses and corporates as well to really make the process more efficient, less costly, it would certainly contribute a lot to the economy as well. I mean, that makes a lot of sense, right? To change things, maybe force a little bit, maybe push a little bit with different types of incentives, but get it done. And certainly help educate or get jobs to the people that might not be able to fit into the new environment. But again, historically, humans have always been trying to develop, and they've been successful in doing so. And it takes time, right? But it happens. There's no way around it.
With white hair like me, shouldn't be sort of afraid of embracing technology, but they should be looking for ways of expanding the universe of counterparties, of deal flow, of less fraud or cheaper pricing, if you will. These things are all positives. Okay. Well, I don't want to take on that much more of your time. We could talk for 2 hours on this, and I think we should talk repeatedly on this subject because it's at the heart of everything else that happens in the trade finance landscape, because it's constant, the innovation momentum. But if you could give advice, 3 or 4 tips to startups who might be listening, or some of the slower moving mid-sized enterprises, whatever the corporates that are listening out there, what would you say were the 3 or 4 reasons why you should embrace technological innovation and not turn away from it?
That's a good question. It's kind of the topic of the future, right? I think the future is going after embedded finance. So if you understand how that works, it would be a much smoother flow and integration into various types of strategies and financing tools. Embedded finance is interesting because it provides financing functionality through non-financial platforms, right? So, if it's actually a question that I received from one of my former clients in the agriculture business, and they were basically asking, and they were very proactive in terms of understanding the market, even though it's an SMB with limited resources, but they were looking for a new ERP system, whether it's QuickBooks or Oracle or any other types of accounting system. And they were looking at the system with the mindset that in the future they would be able to get financing through those platforms, even though those platforms are really not finance platforms, but they have different providers. Like Amazon has white label solutions where you can finance your goods, right? And all the ERP platforms wouldn't be having the same types of strategies. So that's, I think, an important thing to understand your tech stack, not even from a tech stack perspective, but from a strategy perspective. What types of partnerships that can bring you? What types of options that can bring you? obviously, anything that's related to the operational side of the business, anything that's related to reading and understanding documentation, which trade finance has a lot of it, but not just trade finance. Any customer of mine would have certainly tons of bills of lading, shipping documentation, documents with their suppliers, with our customers. They're very efficient tools with, not even OCR anymore because OCR is a little bit outdated, but LLM tools to really make that process smooth and fast and efficient, and being able to track any types of changes live, track any covenants you might have with your lenders, deadlines you might have with your suppliers. It would also help you on the payment side. It wouldn't have to have people manually, setting up wires. So the entire process would be super helpful. And it doesn't mean that you need to hire or fire any people. That really means that your work will be more efficient, your people would be happier, and the people would get basically their own executive assistant on small tasks like that. So that's, I think, coming in a very short term. And again, I very much believe in SMBs and their resilience and their creativity and their understanding of how to make their workforce better and their operations better. And that would lead them to getting cheaper cost of capital from their borrowers, which basically brings higher margins to them. And at the end of the day, the consumer is the one benefiting as well.
Right on. Well, that's an awful lot to digest and process. Thank you for sharing your thoughts. If people want to follow up with you, don't yet know you, how best would they go about doing so? How can they connect you easiest?
Sure. It's LinkedIn. I'm a fan of LinkedIn.
Okay.
My first name was my last name. It's Alisa Rusanoff. And thank you so much, Brendan. It was such a pleasure, as always.
My pleasure was ours and mine. Thank you and see you soon. Thanks very much.